deep dive into VGT, unveiling the powerhouse of tech ETFs. In the ever-evolving landscape of financial instruments, few exchange-traded funds, ETFs, have captured the imagination of investors quite like the Vanguard Information Technology ETF, VGT. Offering instant exposure to a basket of leading technology companies, VGT has become synonymous with growth and innovation, attracting both seasoned veterans and enthusiastic newcomers to the world of investing. This comprehensive article delves deep into the anatomy of VGT, dissecting its investment thesis, composition, performance, and potential risks and rewards. Understanding the core, VGT's investment strategy. The driving force behind VGT's success lies in its straightforward yet powerful investment strategy. It passively tracks the MSCI US IMI Technology 25/50ths Index, which itself focuses on large-cap and mid-cap US companies within the technology sector. This index-based approach offers several advantages here. 1. Diversification. VGT automatically grants investors exposure to a well-diversified portfolio of tech companies, mitigating the risks associated with single-stock reliance. 2. Cost-effectiveness. The passive management style translates to low expense ratios, further enhancing returns for investors. Transparency. The underlying index composition is readily available, allowing investors to understand the specific companies influencing VGT's performance. Under the hood, examining VGT's composition. As of January 16, 2024, VGT holds over 400 prominent technology companies, with the top 10 holdings accounting for about 54% of the total net assets. These titans of the tech industry include Apple Incorporated, Apple, Microsoft Corporation, Microsoft, Nvidia Corporation, Nvidia, Broadcom Incorporated, Broadcom, Adobe Incorporated, Adobe, Salesforce Incorporated, CRM, Accenture plc Class A, ACN, Alphabet Incorporated, Google, Meta Platforms Incorporated, Meta, Amazon.com Incorporated, Amazon. The dominance of mega-cap tech stocks like Apple and Microsoft reflects the index's bias towards larger companies. This composition has contributed significantly to VGT's historical performance, particularly during periods of strong tech sector growth. Performance track record. A tale of growth and volatility. VGT boasts an impressive track record, delivering investors with significant returns over the long term. Since its inception in 1995, the ETF has generated an annualized total return of over 12%, significantly outperforming the broader market. However, VGT's performance has not been without its share of volatility. The tech sector's inherent sensitivity to economic and technological shifts translates to periods of significant price fluctuations. For instance, VGT experienced a decline of over 30% during the dot-com bubble burst in 2000 and again during the financial crisis of 2008. More recently, VGT faced a correction in 2022 as rising interest rates dampened investor sentiment towards growth-oriented stocks. Despite these temporary setbacks, VGT's long-term upward trajectory remains undeniable, highlighting its potential as a growth engine within a diversified portfolio. Risk and reward, a balanced perspective. While VGT offers the potential for substantial returns, investors must be mindful of the associated risks. 1. Sector concentration. VGT's heavy allocation to technology stocks exposes it to risks specific to the sector, making it susceptible to downturns in the tech industry. 2. Volatility. As mentioned earlier, VGT's price can fluctuate significantly. Investors with low risk tolerance may find its volatility unsettling. 3. Limited value exposure. VGT primarily focuses on growth-oriented companies, with limited exposure to value stocks. This could hinder its performance during periods of market value rebalancing. However, these risks can be mitigated through strategic portfolio allocation and proper risk management. By combining VGT with other asset classes and employing investment strategies like dollar-cost averaging, investors can harness the ETF's growth potential while managing potential volatility. Looking ahead, the future of VGT in a changing landscape. The future of VGT remains intertwined with the trajectory of the technology sector itself. Emerging trends like artificial intelligence, cloud computing, and cybersecurity offer fertile ground for continued growth within the industry. However, challenges like geopolitical tensions, regulatory hurdles, and economic uncertainties present potential roadblocks. Despite these uncertainties, VGT's underlying fundamentals remain strong. Its diversified portfolio, focus on industry leaders, and low expense ratio all contribute to its long-term appeal. Ultimately, the decision to invest in VGT should be based on individual risk tolerance, investment goals, and overall portfolio composition. Carefully assessing these factors will enable investors to make informed decisions about whether VGT aligns with their individual financial objectives. For those seeking pure exposure to the potential of the technology sector, VGT offers a compelling package. Its diversified nature mitigates single-stock risk, while its track record of strong returns speaks volumes about its ability to capitalize on industry growth. However, investors should keep in mind that VGT is not a standalone solution. Its concentration in the tech sector exposes it to inherent risks and volatility. Therefore, integrating VGT within a diversified portfolio that balances growth with relative stability is crucial for managing risk and maximizing long-term returns. Here are some additional considerations for potential VGT investors. 1. Investment time horizon. Investors with long-term time horizons are better equipped to weather the inevitable ups and downs of the tech sector. VGT's historical performance shows strong returns over extended periods, but short-term volatility can be unsettling for those nearing retirement or relying on immediate income from their investments. 2. Alternative investment options. For those seeking exposure to technology, but with less concentration risk, other ETFs with broader sector coverage, or a focus on specific subsectors, e.g., cybersecurity, cloud computing, could be alternatives. 3. Active investment management. Investors with the knowledge and risk tolerance to actively manage their portfolios may consider supplementing VGT with individual tech stocks based on their own research and analysis. 4. Ultimately, VGT remains a powerful tool for harnessing the potential of the technology sector within a well-constructed portfolio. By understanding its strengths, limitations, and risks, investors can make informed decisions about whether VGT aligns with their individual financial journey. With its proven track record, diversified composition, and focus on industry leaders, VGT promises to remain a prominent force in the world of ETFs for years to come. As technology continues to reshape our world, VGT stands poised to offer investors a front-row seat to the future, rewarding those who can navigate its potential with a balance of excitement and calculated risk.